Okay, today I'm in London with Nick Leeson. Thank you very much for agreeing to talk to us, Nick. Now, I've interviewed several gamblers in the course of this series, but it's safe to say that you were the biggest. You have a whole new life now. Do the days of Barings Bank seem like someone else?
No, I mean, I talk about my experiences around the world these days, so I don't think I can ever distance myself from it. So, and you've got to learn lessons. You know, it was unchecked risk taking, doing a lot of stupid things. So you kind of take that period of time and try to learn from it, and make yourself better out of it. And if there were some behaviours that were a little bit out of control, learn how to curb those. And I think any form of gambling or investing, you know, there's always that age-old adage between whether working in the financial markets is gambling or whether it's informed investment. But there, you know, a lot of the things that go on in both are very, very similar.
Okay, you came from a working class background. At the time, it's quite unusual for somebody from your background to get into banking. What attracted you to it?
Well, for me, coming from a council house in Watford, my mum was always looking for me to achieve more than she had in her lifetime, and have a more stable career, and something that was going to be a job for life, I suppose, was the thing that we used to look back at, on those days of the late 70s, early 80s, and banking was one of those things. I kind of disproved that theory over the years, I suppose.
Okay, now, remembering back to those days, and also just sort of the footage of Rogue Trader, assuming it was fairly accurate, the trading floors at the time seemed an awful lot like the betting rings on racecourses at the time as well. A lot of business done with hand signals, tic-tac and racing, and, you know, word of mouth. Can you do us a fictitious deal with hand signals?
Oh, I'm sure I can remember a few. I mean, it's. I mean, the hand signals are quite simple. If you hold your hand out with your palm facing away from you, you're trying to buy something. If you face it towards people, you're looking to sell something. So it's quite simple. You're either looking to unload something or you're looking to buy something. Different prices, and then you use your face for the quantity. So, you know, 1, 2. It's fairly simple stuff, and I suppose it is. You know, its beginnings start with a similar sort of thing to what used to go on in the tic-tac side of it. Those markets are few and far between these days. I mean, they've all been, they're all now automated. They're all, you know, run by big technology companies, and the idea there is to take some of the abnormal practices that may have gone on during that time out of the market, and being fully automated is one way of doing that.
Yeah, there's one thing that wouldn't have happened more than once on the racecourse. That is if a workman made a mistake.
Sure.
But the whole Barings sort of saga started when you were trying to protect a colleague, an experienced colleague that made a rick. Yeah. I mean, how prevalent were mistakes in those days in the general?
Yeah, I mean, especially on an open outcry market, they're a daily occurrence. So, you know, the thing is, and it's as true today as it was 20, 30 years ago, you know, if somebody does make an error, the thing is that you need to identify it as quickly as possible and rectify it. Just if somebody, you know, wrote a bet down incorrectly on the rails or something, and it's identifying it quickly and making sure that you remedy the situation as quickly as possible. So it was a daily occurrence.
Were you ever into horse racing when you were in England? Were you ever on the race course?
Horse racing for me was always an entertainment sport rather than something that I looked to get involved in on the betting perspective. I have quite a simple philosophy. You know, I think if you have a team sport or you have even an individual sport, where are humans involved, you can have an insight into what their mindset is, how their, you know, what their form is over a period of time. You know, me logically, when I'm trying to transpose that onto a horse, it doesn't work for me. You know, I can't work out whether a horse has had a good night's sleep or it's, you know, it's on its game or it's doing things. So I wasn't really into studying the form of horses. So for me, I started work at Coots, and they would, you know, once or twice a year there'd be an outing to Sandown or Ascot, but it was more of a team building thing. And whilst there, definitely have a bet. I live in Galway now. Obviously they have the festival every year. You know, I might attend one day out of the 7 days racing, but have been involved or have been around betting over a number of years. I mean, Paddy Power is a friend of mine, and I set up or was the face of their first steps into the online betting markets, I think in 2000. So I gave some interviews around the launch of that.
Okay, now you mentioned in the Rogue Trader that you were placing bets. I think it's for a guy named Simon Jones, one of your bosses there. Was there a big betting culture in the banking business over in Singapore and the Far East?
I don't think necessarily it's something that you would ascribe to the banking industry. I think the trading floors are very different. If you look at Life back in the UK, or if you look at Cymex at the time, everybody's looking for an edge. So there's certain things certain events that people would almost trade around. So a couple of examples would be the World Cup. So if you think of my time in the UK before I left to go to Singapore, I left to go to Singapore in 1992. I was in Singapore 92 to 95. So there were a few spread betting firms that were coming up or just starting at the time. The majority of them were doing financial betting on where the markets were going to either finish out that day or settle at a specific time of day. But there was also a lot of markets on the World Cup, football matches, and the Asians are very much, you have Asian Handicaps these days, so the Asians are very much into that. They all follow the Premier League and other matches. But one of the things around the World Cup that was very big, both on Life and in Singapore, and I'm sure a couple of other markets as well, was the total number of goals. So you'd have a bid and an offer or a spread between those two markets. So I can't remember how many teams were in the World Cup back in the 90s, but it was fewer than now. So I think the market used to be about 128 to 130, and it traded almost like a future. So that's why there was this synergy with those two particular markets. So you could buy at one price and sell at another. And just take a profit on the movement between it. So if it was mispriced, you had a couple of big games with, there were some new teams coming into the World Cup around that time who maybe were getting on the wrong side of a couple of bad results. But the similarity was that it traded like a future and the market moved quite similar. So in Asia or in Singapore at the time, they would always want a price on what the total goals market was going to be. Somebody would be able to access that in London, be that me, and you could make your own market, which was a little bit wider than what you were getting from the spread betting firms, and give yourself a degree of comfort if you needed to hedge it out at any time. So it was more intertwined with the financial markets than taking a bet on a horse per se.
Yeah. Now going back to the Barings thing that it's famous for, you got really into it deep with the 5/8 account.
Yeah.
And then you got out of it. You managed to bet your way out. In
May of 93, yeah.
Why did you not think, thank God for that, and close the lid on it?
Well, look, I definitely did. And, it occurred it was on the expiry of an option on a Friday afternoon. And I had money, I'd made money and I'd recouped all of the losses and I'd actually made money. And over the course of that weekend, there's a degree of celebration, and this is never going to happen again. But I think, lack of management skills in the preceding period. All of the people who worked for me on the trading floor who took the orders were still making mistakes on the Monday afternoon, and I very stupidly put them back in. Now, there's probably a whole host of reasons that you can come up for that in terms of not wanting to highlight an error at that stage because people might have looked back at what had gone on before. The fact that you've managed to get out of the situation once, so that you think that you're going to be able to do it again. So there were a whole host of things that were influencing that. Whether you do it, I think a lot of what went on during that time, when you look back at it, was subconscious rather than conscious, whereas I should have been a little bit stronger, a little bit more resolute, and said, that's it, we're not doing this, close down the account, just as you would do with a betting website if you've got a gaming problem, and be done with it. But Gamble Aware or whatever they're called weren't around at that stage.
Now, simplistically, if I've got my facts right, you were then sort of doubling up to try and get back.
Yeah, there's lots of different analogies that come to the fore. What it was for me, and maybe this won't come across in the right way, it's more of a cash play. I needed cash, and the reason why you need cash is to be able to keep the balance in the 5/8 account at zero. So you need premium, which is what you receive when you sell options. And in Singapore at the time, they paid you 100% of the premium. So for me, when I look back at it, because it's not a pure gambling analogy or terminology, what I was doing was I was swapping a P&L item for a balance sheet item. If you look at it from a very superficial perspective, it is doubling down. And in terms of how the position changed, it's just getting dynamically bigger as the markets are moving against you. So there's different ways of looking at it, but I understand the gambling or doubling down analogy, and it's definitely the way that it looks. But that wasn't necessarily, it wasn't a case of me thinking, okay, I've got 100 lots that are against me, and if I sell another 100 lots, it's only got to move back half the position, which is the traditional way that you would think of doubling down. For me, it was in order to secrete this account, I need to keep the account balance at zero, which means that I need to sell another 100 options to bring that account balance down to zero. In the meantime, that doubles the position, but that wasn't the thought process, if that is understandable.
Yeah, I mean, because I was going to say, because casinos and bookie empires are funded on people following increasing staking systems. So, as you're looking for a small arbitrage margin, is it not quite as foolhardy as it sounds to try that strategy?
Well, it wasn't a strategy that I was using. And it's funny, wherever I go in the world and I'm talking about things, you often get asked is, what was the strategy that you were using? There wasn't a strategy. The strategy was I needed cash to make the account balance zero, so that would be secreted on the balance sheet, that the checks would be, that you would be able to overcome those checks. Nobody had asked any more questions during that period. So in the process, what happens is your exposure doubles.
Okay, at the end, it must have been unbearable pressure, and you kind of slept at night. I mean, was it almost a relief when it all blew up and you got caught?
You're kind of always, from day one, you're waiting for somebody to knock on the door and expose what's going on. And as time passes and people aren't knocking on the door or asking you a question about why the position is mounting, or why this doesn't agree, or why that doesn't agree, you garner a bit more confidence that you have more time to correct the situation. And there was, I was certainly looking to just get as much time as possible in order to be able to solve the situation. So, but in '95, which was the year of the collapse, you're holding on for different things. Bonuses are about to be paid. My wife's got some friends visiting, none of which make any sense when you look back at it. But when you're in the moment and you don't want to expose your own failure, and you can't enunciate what's going on, you're kind of waiting for that event to be taken out of your hands, which it was in February 1995.